Hey everyone, it's Matt with EquiPredict Analytics. Thanks for tuning in. In this video, we're going to be going over, instead of 10, we're going to be using 12 stocks to outperform the S&P 500 from June to August of 2025. And so just briefly, again, if you're enjoying some of the content we're providing here, please do subscribe to the channel. You can also head over to our website, EquiPredict.com. We've got a whole bunch of information over there regarding market forecasting. We have some articles that are definitely worth checking out and some forecasts available. And you can also learn about our forecasting models there over at the website. So it's EquiPredict.com. So what we're going to do is we're going to dive into, if you're returning to the channel, you'll know that we have a video up on 10 stocks from February that we use to outperform the markets. And we're going to be kind of talking about what the results were of those 10 stocks that we chose in February to use between March and May of 2025. But briefly, just jumping into this before we go in any further, just talking about our criteria that we're looking for when we choose these 12 stocks. They have to be outperforming over the last 58 trading days, so they outperform the markets. They have to be nested within an outperforming sector. They have to be attractive from a technical analysis standpoint, and they have to be consistently beating analyst estimates quarter over quarter, preferably year over year as well. So the 10 that we chose last quarter for February to use from March to May were these 10 here. You're going to see CrowdStrike and Logitech here listed twice because in the forecast that we gave our subscribers, there were two different buy points or acquisition points in the calendar that pointed to great times to pick up CrowdStrike and Logitech. So you have that you see them there twice. So if you were to buy one share of each during the forecasted week that we provided our subscribers, which you'll see in just a second how that forecast works, your outlie at the acquisition points in total would be 1763 approximately, and then you would have, if you had held these through the ending, the completion of the earnings season in May, you would have walked away with 2265 for a gain of 502. It's 28% return over about a month and a half to 2 month period if you had chosen the stocks during the period of time that we had forecasted. So the way the forecasts work, one of the stocks, as you saw on the list there with Carvana, we had pointed out to our subscribers that mid-March would be a great time to pick up some shares and hold it until April, potentially even longer. Market tops are very difficult to call. Market bottoms are much easier. So nonetheless, you hold it and you acquire some mid-March, and this is the result. You had Carvana here. This was mid-March, the week that housed March 13th, and then you held it and off to the races it went. And so we're going to be providing you guys a Walmart forecast in just a moment. The first one that we're choosing out of the 12 is Walmart. It's looking very good. Consumer, sort of the consumer staples area has been outperforming for some time now. Kind of under the surface, rotations have been going towards sort of your consumer staples area. Walmart lives in that sector. And so what we're going to be doing is, taking a look at these and picking out the stocks, like I mentioned, that are living in the sectors that are outperforming, Walmart being one of them. So the 18-week moving average was the 18-period moving average is that red line. That's pointing upwards. So is the 40, which is that dark blue line. Everything looks very healthy here. Walmart's been outperforming since early of 2024. And you can see this line here. This red line here is the performance ratio between Walmart and the stock market. And what it's done is when there was a rotation just recently, which we alerted our readers and subscribers to, there was a rotation towards growth that was going to likely happen in mid-April. That happened. Walmart being a more value-oriented stock, it started to roll over in terms of its performance, but it's coming back down to test this moving average, this 21-week moving average that we have underlaid on the performance ratio. So likely this is about to turn back up again as well. So that's our first one. The way the forecast works for Walmart, again, we give the forecast for that as well for Walmart for everyone here. Your first acquisition point is likely this week to pick up some shares. Another excellent buy point for Walmart should be the last week of June and be holding all that until early August. So that's the way the forecast works. It gives bullish bias. Our forecasts do not forecast magnitude of the move. They are purely calendar tied. All right, so we're looking at when is it likely to experience bullish bias in a particular equity. That's what we're focused on. So Walmart is telling us at that particular point in time, here and here, you should be looking to pick up shares and ride into August. Our second one is Cisco Systems, just an excellent looking chart. These are starting to curl up, the 18 and the 40. Price is broken out. We don't have the volume data here for any of these charts due to the fact that it would get just too granular to look at here on the screen. But we see that it's been outperforming since mid-2024, indicating Wall Street is really favoring Cisco in a big way. So we're looking for that to break out above $66 per share. Our third one is Microsoft. Obviously, just an excellent performer. Overall, it started to outperform the markets in actually February of this year. It was pretty much a laggard, actually, you can see from mid-2024 onwards. But then it started to take off in February or March of this year, and it has. We continue to expect more upside out of this, given the fact that we have a curling up moving average on the performance, as well as the 18 and 40 week moving averages are starting to curl up as well. So everything looks really great, and the PPO indicator is about to cross over into positive territory. So Coca-Cola is another one, one of Warren Buffett's favorite stocks. We have another Warren Buffett stock in here as well, which you'll see in just a moment. This one, we're expecting further upside potential. Again, we have to do the forecast for Coca-Cola. You're going to see that a lot of these consumer staples or value stocks have rolled over since the growth rotation toward that was executed by Wall Street in mid-April. These value stocks are likely to start to outperform very soon. So again, Coca-Cola is more value-oriented stock. JPMorgan is another one that we're looking at as well. We're going to be doing a forecast for JPMorgan going forward. We had a breakout, small gap up, and it's been outperforming really ever since mid-2023. All the 18 and 40 are starting to curl upwards, and the PPO is in positive territory, which is great. Amphenol Corporation just really took off like a rocket. You get it. I don't have a highlighter here, but you have an air gap between the price action and the moving averages right now. So going ahead and taking a long position in Amphenol is a risky proposition. It's best to either wait for the moving averages to catch up to the price, or for price to come down and maybe consolidate back towards moving averages to pick up shares. If you're not using a forecasting and you're just using technical analysis on a pure basis, you want to be looking for that to kind of come down and close that air gap. And obviously, it's been outperforming the markets since March of 2025. So really good things ahead for Amphenol. Boston Scientific, just an excellent company. It's been a strong outperformer for years. They continue to beat analyst estimates just quarter over quarter, year over year consistently. So we're definitely anticipating at some point this year breakout above $107 per share. And then the 18 and the 40 are obviously pointing upwards. Everything looks very good on this chart. The next one is Morgan Stanley. We're going to be taking a look at this. We had a gap up. The banking sector for folks who are thinking about who are considering the economy kind of on shaky ground. The banks are really a great indicator for how the economy is doing. Obviously, there's been a period of uncertainty between late 2024 and today in terms of this choppy price action. But according to what we're seeing, Wall Street is very much favoring Morgan Stanley. So we're going to be looking for that as well to do a forecast and then see a rise. Bank of New York Mellon, BNY. This is another one of Warren Buffett's favorite stocks. Acquires a lot of these shares actually, and so we're looking for a breakout above $100 per share in BK at some point. Just be careful that what happens is when you get to these round numbers, they can act as resistance. For example, here's $50 per share. If you look here, price was struggling to hit this here, and then kind of paused as it got to 50, and then off it went up beyond $50 per share. So just watch out for those round numbers if you're going to be looking at BK and other similar equities. Near round numbers. Philip Morris International, again, another kind of consumer staple stock, or definitely a consumer staple stock, I should say, but more a value-oriented stock. They pay a great dividend, so definitely worth considering. You have that rollover you can see here with the value-oriented and the staples kind of stocks that happened in mid-April when everyone rotated, or Wall Street rotated towards growth. So we're going to be looking for this to turn back up eventually, but it's getting a bit stretched off the 18 and 40 moving averages for now. So just be careful about when you go ahead and take up shares of Philip Morris. We do have a forecast available for subscribers, 4 p.m. For later this year. I believe it's already been posted a few weeks ago. So definitely go back and look at that. We'll redo the forecast for that. eBay Incorporated, great e-commerce company that's been really in favor. Wall Street's been loving eBay since February of 2024. It's been taking off, and it looks like it's potentially going to consolidate before breakout above $72 per share this year. And the last one is Zscaler. This one is obviously about to take off. It's hitting this resistance around $260 per share, but it's been an outperformer, quietly sort of rotating Wall Street's been quietly rotating towards ZS since early this year. The question is it going to get above $260 or $70 per share? So we're going to be doing a forecast for that. It's likely going to tell us when we can expect either the moving averages to catch up to it or the price action to come down and meet the moving averages. So hope that helps. If you want to pick up this PDF, you can head over to the website, EquiPredict.com. Good luck and good trading out there.